Hi, it's Eric Osnes with Homebridge Financial Home Mortgage and ericismybanker.com. Several years ago, after a really long week, I called my dad up. I told him I wanted my inheritance early. Of course, he just laughed at me and said, "Too bad, he'd already spent it." Well, hopefully you're not in the same boat. And because with only a very few exceptions, a gift from a relative is a perfectly acceptable source of a down payment on a mortgage. A gift can be used to cover up to 100% of the down payment on just about every transaction and plus closing costs. So probably the only exception would be jumbo loans, where many of those have a minimum requirement from the borrower, usually 5%, but the rest, even on those situations, can be all gift. The documents required for a gift are pretty straightforward. There's a gift letter that we provide as a lender. It's completed and signed by all parties. And then we need to show a paper trail of the gift. The easiest way for that to happen is to have the donor wire the gift funds directly to the escrow company. Alternatively, we get a copy of the check and then a transaction history from the borrower's account showing the deposit of those gift funds. Pretty straightforward. The only other exception, if it's an FHA loan or a VA loan, then we also have to show that the donor had the funds to give in the first place, meaning we have to source the original source of the gift funds, meaning a bank statement from the donor. Not required for conventional loans. So the other trick is the gift must be from a relative. The gift letter will ask what the relationship is of the donor to our borrower. We don't ask for a family tree, but you're required to document what the relationship is. So what about gift taxes? There is a common misbelief that any gift greater than $15,000 would be subject to a gift tax to be paid by the donor. It's not true. Actually, it's not the case when you're giving a gift to family. The IRS allows a lifetime gift tax exemption on gifts and actually estates up to a certain limit that's adjusted annually for inflation. For 2021, that amount is $11.7 million. And for married couples, it's double, it's $23.4 million. There is an annual $15,000 gift tax exclusion, which is also indexed for inflation, but that's separate from the lifetime exemption of gifts to relatives. The $15,000 gift does not count towards that $11.7 million lifetime exclusion, but anything above that would. So, for example, let's say you're a parent, you give $100,000 to your kid to buy a home. 15,000 of that would be exempt, but 85,000 would be deducted from the $11.7 million lifetime exclusion. You would file a gift form to the IRS. It's IRS Form 709, but no taxes would be owed. Again, no taxes would be owed. And from the estate planning perspective, this is also kind of nice. A gift will, of course, reduce the size of your taxable estate, minimizing future, excise or future estate taxes. With the risk of taxes rising in the future, it's a good time to consider gifting to your loved ones. There are no tax implications, and you get to see the joy of that gift while you're still around. Right, kids? I'm available to help discuss gifts and any other complexities of buying a home these days. Just reach out. You can call me at 206 915 Eric, 915 3742, or email me, eric at ericismybanker.com. Hope this information is helpful. Have a great day. Talk to you soon.